All right, good Monday morning to you. Let's start with the ES, with the S&P futures. Um, so we got that weekly hammer right here that we've been waiting for, and and that's what we're looking for, man. We're looking for that. I would have liked it to have ended up a little higher. Would have been a nicer hammer, but that's all right. We'll take that. Let's see. So basically, I'm remaining neutral until a break of last week's high, right? And as that translates to the S&P, we have the same thing. Here's that hammer, really nice hammer, man. And these in 1 week we did it. That's encouraging to me. These red lines right here are previous gaps that I kept my eye on, kind of saw it as a target. And that big fat red line down there, that there is just the low. So I'm trying to establish a trading range that we're going to be in this summer, and we just need some of this volatility to die off. The market move less aggressively. I mean, 153 points a day, day after day. It's absurd, absurd. And just the idea that we lost more money um, during this correction than we did during the financial debacle of 2007 and during the dot-com bubble, and there was another incident. I think it was a 9/11 incident um, that was a huge loss in the market. But still, oh no, the COVID sell-off. So we lost about 4.6 trillion in the dot-com bubble burst in the market. Dollar wise, I mean, percentage wise, I'm sure that the others are bigger, but dollar wise, these are the largest losses. The global financial crisis, we lost $2.3 trillion dollars. The first one was 4.6 trillion. I don't know if I said billion. And the COVID, we lost 4.4 trillion dollars. In this current correction, we've already lost 7.6 trillion dollars. So, huge dollar loss for a situation that's really not that grave. I mean, economically we're kind of sound. The fundamentals are relatively sound. We have inflation issues. We have supply chain issues. But it's not like we're Europe. Like what we don't have, we could probably do without comfortably or find alternatives. And that's probably what's going to happen. This is just a lot of fear. A lot of the cowboys coming out of the market or getting blown up out of the market, and just fear, like nobody knows when to move. And once we get some indications that the market stabilizes a little bit, then we'll get some moves. And the traders are making some money too. You will come into the summer vacation, and the market should die off, and it usually does. And I think everybody's just stacking chips until the dead cycle. So we'll see, we'll see. But anywho, look, here's our hammer. We're neutral on the market right now. I mean, we can go and eat up our tail, but what we want to see is a break of last week's high, and then we can get bullish on the market and see where it goes. I'm thinking my mid range is a good target, and then I have a gap up here that I think we should go back and fill. And we have a gap right here. I mean, we could tag that and turn around. We may just make a higher, a lower high, and then turn around and continue our march down. This is not a bottoming pattern. Rarely do you see, well, actually, on the dailies, rarely do you see a V bottom. So, and that's what we have. And we have that gap down there, which is very ominous. I'm thinking that this is the next low we make. So, what I'm looking for is a move up, maybe catch this high around here, about 4,100, and then come down, make a higher low. Maybe close this gap down in the 3,900s. Get a trend reversal on the MACD along with that trend reversal pattern, and that might make for another move up. I would like to see us start trading within a trading range. So, about 38, 48.60 is my low. 48.18 is the high. I mean, that's a huge range, man. If we can get some movement inside of that, maybe trade up, catch the center, come down, we might be able to do well this summer, just taking directionals. But right now it's still up in the air, or who knows. You're subject to sensationalism. You get that bozo Kramer screaming out there. I mean, yeah, what's blowing my mind now is he's raving oils, 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 and he used to come on last season or 2 seasons ago with this definitive statement, or at least during COVID: oils are done. You're an idiot for buying oil. Nobody buys oil. Don't buy oils. Oils are done. I mean, it's so funny. I mean, I just like to listen to all these guys come on there and make these blanket statements, and then watch it in his face, and then get upset when people tweet him and call him out on it. Very funny. So anyway, I digress. We got that hammer, and that's what we're looking for today. Interesting daily pattern. We have a gap up here that I think is our next target, and then come around and close that gap. So that's what we're going to watch for. But today we're watching for that break of the weekly high. I mean, we're neutral until we see that break of the weekly high. We jump down to Bitcoin, Bitcoin, and it's showing us the same thing. We got a nice gap up here. I don't have enough history to really argue that it's within the character of Bitcoin to close gaps. And as far as currencies or cryptocurrencies, I'm not worried about Bitcoin disappearing. I mean, nice market cap, well marketed, good name. You could be comfortable in Bitcoin. The other stuff, that wanted to catch up to Bitcoin, I'm a little leery about. So I do have a few bucks in Bitcoin, and I'm not worried it's going to disappear. I'm just, you got to learn it, you let it develop itself. And what we're seeing in the cryptocurrencies is what the .com bubble was all about for all you young cats. Every putz with ears put out a company with a .com in the end, and it made money. And that's I saw companies go public. They were just pizza parlors, man. And this one, it was very funny. The prospectus, it was just this pizza parlor, and it had the metal safety gate down, and there was graffiti on it, and that's what was on the cover of the red herring or the prospectus. And the thing went public. People jumped all over it. The underwriter made money. The owner made money, and the public got beat. So that's what's going on now. I mean, you put crypto, you put mining, and everybody wanted a piece of it. And now, like Buffett said, the tide goes out, and you get to see who's swimming without trunks. So all the lousy companies are just going to fall to the wayside, and the industry makers and the future builders are going to be left standing. So I'm confident we'll see Bitcoin, and then we'll see what the governments do to that going forward. I mean, it's a really, really rocky future for all of them. I mean, there's a lot that's going to go on. There's going to be digital currency, no doubt, but I think that the governments are going to have a greater hand in it. This non-centralized currency, that concept is going to go to the wayside. So anyway, as far as trading, again, I mean, I don't see enough to argue that it's not common for a single bottom. It's a whole different animal. It's still developing its history, and you can't really get the character of it because it needs more history. It's still a very young product. The trading patterns are changing. It's getting less erratic because you're getting all the bozos out of it, and we just have to keep watching it. But on the weeklies, we also got that hammer, although it's not a very good-looking hammer. But again, for crypto, it's all new. Or for Bitcoin, as far as a good trading pattern, it's all new. So we'll watch that, man. I'm neutral on it right now. I don't know how I feel when it breaks this. I just got to keep mulling it over. Actually, we could even get rid of all this stuff. I'm just gonna watch that high right there. So yeah, that's the dilly on that. Let's take a look at the VIX. And since it's Monday, I'm just looking at the weeklies. I mean, the VIX looks like it's bottoming out. You know, this is it. I mean, you've seen this pattern before, right? This is like a mean reaction. So, and this is exactly what went on in the meme. There was an overreaction. Boom, 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 boom. And it took off. And look at that, man. That happened, in February. So that was the Ukraine invasion. Bang, 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 bang. So when you see that, when it goes parabolic like that, and you see these big tails and shit like that. I mean, even on meme stocks, you know that this is wrong. It's not going to keep running. So now it's calmed down. It came down. It filled in this little gap, and now we're getting a little reactionary over here. Um, and really, I have to argue that it's all over rhetoric. You know, um, so I really I'm irritated because it's taking a lot of time. And yet, every time it's touching that support, you got to wonder if it's going to break it, shit's going to get ugly. And there's a saying that the market could stay irrational longer than you could stay liquid, and that's what's going on. And you don't know how long it's going to stay irrational. So it makes you very uncomfortable. It's hard to say, oh, this is it. But I mean, it looks pretty good. I mean, we're putting in what we can argue is a little bit of a pennant here. We broke it twice and couldn't hold it. So it looks like the volatility is floating off, coming off. And that would be indicative of the option put action. So, everything together, it looks like we might be coming into a quiet place and be able to get some logical trading out of this. And we look at the 10-year. This has been very confusing to me too. That's a long engulfing bear bar candle. Um, so that would lead one to believe that it's going to reverse. Maybe just come back down around 25 and a half area or so. Um, so we're going to watch that. That's on the weekly. And we'll be. I mean, how you play this will probably be an inside bar today, and then you'll look for a break of that inside bar, and that's how I would play that. On the daily, just too choppy to really call anything. It looks like a trend reversal coming in. I mean, you could see that the momentum is fading as this sucker's pulling, pushing up, and really to trigger this, it's got to break this pivot low. So if it does break on the daily, if it breaks the low of the 27.24, and this is just the indicator, so it's 2.74 basis points. So or 2.74%. So if it breaks that lower area, then we could expect it to move down some more. Down, down, down. I'm sorry, I'm so mellow. I just finished meditating and I'm enjoying a really good pot of coffee while I'm talking to you. So we'll look at that. Look, I just got to argue that things look as though it's favoring to the downside. And that's what I'm looking for. But I'm being very conservative. Well, things look as though it's favoring stabilization. So interest rates looks like it's favoring the downside. VIX looks like it's getting heavy and it's going to start dropping. The S&P looks like it could recover. I don't really want to see it shoot back up. I'd rather see it just do a slow grind. Get a little orderly trading and get back to the normal business as usual kind of days. These 123, 150 days have to be killing people all over the place, especially new investors and things like that. It's just so dramatic that you get locked into things. It does a head fake. You take some longs, and it takes off real crazy to the downside unexpectedly, and you're locked in. I mean, normally, you could open up well below your stops. and get hammered, or you don't have stops, you have visual stops in, and you open up low, and then you're like, what do I do? Do I take this huge loss? So yeah, I don't like seeing people get beat up. I mean, I'm even getting calls from my mother and their friends. What do we do? So I don't know. I guess passing away is a good option. At least you outlive your money. Stop taking all them damn pills that the doctors give you. Just live natural and die when you're supposed to die. Yeah, and you'll have plenty of money to live on. Everybody thinks that the medical industry is helping you live longer. By the looks of these people, it just helps you die slower. So, all right, I don't want to go off on another rant. um, I was around a lot of old people this weekend. I just watch it, and I kind of lived an action-packed life, and I just can't imagine, fading out like that. You know, I'd rather go out with a bang, have a good life, and I don't understand why that's not an acceptable practice anymore. I mean, cultures for thousands of years used to revere the manner in which they die. And that always seems like so much better, such a better way to live. To look forward to a beautiful death. You know, and there's a saying that I really like, which is "Life is long enough if lived well." You know what I mean? So I believe in that. So anyway, instead of sitting on your ass and staring at the screen all day today, get out there and make a story. So on that note, remember, try not to invest more than you could afford to lose, because you don't need this aggravation. The world provides enough. And get your meditation in. And be calm and cool when you're trading. Trade at peace, and good luck with your trades.